So usually when all of those things happen and we've got liquidity returning, market's pretty positive. So I love this series because I think everybody's looking that way, and that usually means the opportunities to look the other.
Crypto family, welcome back to the channel. And as you can see right there, Raoul is bullish for 2023. And we're going to be checking out some more clips here to see why he's so bullish for 2023. So stay tuned for that. Let's go ahead and check out the current state of the cryptocurrency market. At the time of this recording, Bitcoin dominance is up to 43%. Ethereum dominance is at around 19%. You have Bitcoin sitting at 22.7. Ethereum's at 1,600. XRP's at around 40 cents. You have BNB at 300. Cardano's at 36 cents. Dogecoin's at around 8.5 cents. And Solana is back in the top 10 at $25, flipping Matic there. So that is the top 10 cryptos. Let's go ahead and get into this clip and see why Raoul is so bullish for 2023.
I'm hearing more of this kind of mild recession, soft landing calls from people. And I don't know really yet. I don't really see that. I see short and sharp. And we'll talk about that later in the second half. But I don't really see the mild element. Maybe it's to do with, if we go back to 1980, the Volcker one, right? Everyone talks about that as like this terrifying recession. It was actually a really mild one. And the S&P went down 28%. And that was it. It was kind of over and done with. So maybe there's something to do with nominal versus real. That means that prices remain, demand remains higher because of nominal.
And we can see right here what Raoul was referring to with the federal funds rate back in the 1980s when the Fed raised interest rates all the way up to 20% back in the early 80s. So what did the S&P do around this time? We can check out the chart. Back in 1980, as we can see right here, we actually had a good year for 1980. The market was going up. And then at the beginning of 1981, the market sold off a bit and the market went down 25%. Looks very similar to something that we just recently had in the S&P. We went as low as around 26%. After the S&P bottomed out right here around September of 1982, for the rest of the decade, the S&P rallied around 200%. So Raoul is saying what happened in 1980 in terms of the S&P looks very similar to what is happening right now. And we could potentially see the S&P have a nice rally like it did back in the 1980s.
Yeah, but a lot of the direction is that the inflation weight is less. And therefore, the rate of change of interest rate increases. The Fed are making it pretty clear they're probably going to go to 25. So it's, as you know, in global macro, it's the rate of change that matters more than anything else, not the absolutes. So if the rate of change changes, all of these beach balls start popping out of the water that have been held down by the heavy weight of interest rate rises and that rate of change. That's all gone. So suddenly, emerging markets go up, gold goes up, crypto goes up, equities go up. That whole story. I'm actually very bullish. Now, the recovery from a bear market either comes two ways. Either it comes up, corrects, and then eventually goes, or it comes sharper. It depends on central bank action, liquidity, that kind of stuff. But if I look forward, I'm very bullish because we've just gone through the rate cycle. So that's out of the way. So we've got the downside rate cycle. It might stick somewhere in the middle, which I don't think they will, but let's say the consensus is right. It's the rate of change that matters. The rate of change comes down first, then sticks. So that's good for risk assets. We've marked down everything in value and price. So therefore, the probability of a risk-adjusted return on and then we've got, I've been talking about this a lot, the exponential age technologies. We were talking about Tesla, but anybody's been paying attention has seen what happened to AI. It went from me interviewing Emad to say, oh my God, this is coming, to ChatGPT, to everyone thinking, oh shit, we're out of a job within 3 weeks. I mean, that ChatGPT went from 0 to 1 million users in 4 days. We've never seen anything like it. And it keeps crashing. There's so many users on it. So that's the technology. And we've got tons of these coming. The energy situation that you've been following so closely, the nightmare in Europe didn't pass in the end. It's, we saw what was bad, but the Peter Zeihan's of the world and others were like, the Europeans are going to be having to be chipping frozen corpses from the streets. That doesn't look like that's happened. Nobody's run out of energy. Yes, there's been some rationing and stuff like that, but it seems to be contained. So also investors were so negative that I've got charts going back to the 1970s, the AAII investor intelligence survey. It was the most negative since 1970 or something crazy. So usually when all of those things happen and we've got liquidity returning, markets are pretty positive. So I love this series because I think everybody's looking that way, and that usually means the opportunities to look the other. I've been doing this since 1990. I've heard this debt limit, the negotiations have gone on and long, but look, there's never a default. I think what's interesting is the point you raised, interesting. And the Treasury General Account is an interesting part of that equation and how they manage it. Because don't forget, there has been various offsets to QT that have been going on that meant liquidity's not been as negative as it could have been.
So as you can see, what Raoul was laughing about there was the debt ceiling not potentially getting raised. This thing has gotten raised year after year after year after year. It's not just been Democrats. It's not just been Republicans. It's just what the U.S. government does. They have unlimited pockets, so they spend unlimited amounts of money. And when we do hit that so-called debt ceiling, they just extend it further into the future. They just keep kicking the can down the road. And you can see that right here in this chart over the past couple of years with the COVID spending. This has obviously got a lot worse. And we will see something on Thursday this week with the extension of the debt ceiling, and I'm sure they will raise it yet again. But let me know what you guys think about that clip from Raoul Pal. Are you as bullish as he is? Do you think that 2023 is going to be a good year? Do you think we're going to sell off? Is this depression going to be even worse? Leave your thoughts in the comment section below. The Bitcoin Bros do believe that 2023 will be a good year for crypto. We've already seen Bitcoin and crypto become the best performing asset class of 2023 so far. Over the past couple weeks, we're up big. Bitcoin is up 10% over the past week. This doesn't mean we can't have a pullback, but things look good so far. So we'll be keeping you guys up to date. If you are new, make sure to hit that subscribe button. Thank you for watching all the way to the end of the video. Hit that like button if you found any value. My name is Aaron from the Bitcoin Bros. I'm out. I'll see you guys in the next one. Have a great